All right, let's dive in. Today, we're talking about one of the biggest, most powerful trends reshaping the entire world of finance: ESG investing. And this is about so much more than just profit. It's about purpose, and it is absolutely changing how millions of us think about our money. So let's just start with a number that's, well, it's almost hard to wrap your head around. $40 trillion. That's the projected size of the ESG market by 2030. So right off the bat, you can see we're not talking about some tiny niche corner of finance here. This is a tidal wave of capital that is fundamentally changing the game. So what exactly is all this money chasing? Let's break down what ESG investing really is. The easiest way to think about it is as a framework that basically moves the goalposts for companies. It's shifting the focus from just pure profit to a much, much broader view that includes people and, of course, the planet. At its core, ESG is really a data-driven approach. Now, this isn't just a new name for socially responsible investing from back in the day. It's way more rigorous. It uses specific, concrete criteria to actually grade a company's performance on environmental, social, and governance issues. And what's the goal? Well, it's twofold: to uncover hidden risks you might not see on a balance sheet, and, just as important, to find brand new opportunities for growth. Okay, so to really get this, we've got to break ESG down into its three core pillars. This is the actual lens that analysts use to look at companies, so let's take them one by one. First up, you've got E for environmental. This one's pretty straightforward. It's all about a company's relationship with the natural world. We're talking about its carbon footprint, its pollution record, how it handles waste, and its overall climate strategy. The big question here is this company part of the problem, or is it trying to be part of the solution? Next, we have S for social. This pillar is all about people. How does a company treat its own employees? Does it pay fair wages? Are the working conditions safe? What about its supply chain? Is it ethical all the way down? This even looks at how the company deals with its customers and the communities where it operates. And finally, there's G for governance. Think of this as being all about leadership and accountability. How is the company actually run? Is executive pay out of control? Is the board of directors diverse and independent? Are they transparent with their shareholders? You see, good governance is often seen as the bedrock of a company that's built to last. Okay, so that's the theory. But how do investors actually take these ideas and apply them in the real world? That brings us to the different strategies they use to build their portfolios. And what's so interesting here is that there's a whole spectrum of ways to do this. On one end, you have a really simple approach, like negative screening. That's just avoiding entire industries like tobacco or fossil fuels that you don't agree with. But on the other end of the scale, investors can get way more proactive. They can use things like shareholder action to push for change from the inside, or even get into impact investing, where they're directly funding solutions to specific problems. This brings us to the multi-trillion-dollar question, doesn't it? Does doing good with your money mean giving up good returns? I mean, it's the number one concern for pretty much any investor. Does aligning your portfolio with your values actually come at a financial cost? Well, the answer might actually surprise you. Recent data shows that in the first half of 2025, sustainable funds delivered a median return of 12.5%. And get this, they actually outperformed their traditional counterparts. This suggests that focusing on ESG isn't just about feeling good. It might actually be a marker of a more resilient, better managed company. And you better believe that kind of performance gets noticed. It's attracting a staggering amount of capital. We saw that $40 trillion projection for 2030, but some forecasts are even more bullish. They're projecting the global market could swell to over $125 trillion by 2032. This is no longer just a trend. It is a fundamental reshaping of where global money is flowing. And even in places where there's a lot of debate and political pushback, like in the United States, the foundation here remains incredibly strong. Sustainable assets held steady at a massive $6.6 trillion, which just shows real staying power and a deep commitment from major investors. But okay, let's be really clear here. It's not all smooth sailing. For all its massive growth and all its promise, ESG has become a total lightning rod for debate and criticism, and it's absolutely essential to understand the controversies swirling around it. So this really boils down to two very different ways of looking at the same thing. On one side, you have the proponents who see ESG as just a smarter way to manage long-term risk and find really high-quality companies.
But on the other side, you have critics raising some really serious concerns about things like greenwashing, totally inconsistent data, and the risk that ESG is just being used to push a political agenda.
Let's dig into those criticisms just a little bit more. First, you've got greenwashing. That's where a company spends more money marketing its green credentials than actually being green. Then there's the huge issue with scoring. The very same company can get an A+ ESG score from one agency and a C- from another. It's confusing. And all of this leads to a bigger philosophical question. Is the real goal of ESG to create real-world impact, or is it just another fancy tool for managing financial risk? So, with all that complexity and all that debate in mind, how should you think about this for your own money? Let's bring this right back down to earth and talk about how an individual investor can navigate this whole landscape. Getting started can really be broken down into 3 pretty simple steps. First, you've just got to define what matters most to you. Is it climate change, labor rights, boardroom diversity? Second, do your homework. Use the screening tools that all the major firms offer to find funds that actually line up with your values. And third, integrate them into your portfolio and just keep an eye on how they're doing, both financially and in terms of their impact. Ultimately, I think this quote really captures the core promise of ESG perfectly. It's this idea that when companies operate in a way that aligns with broader societal values, they just build stronger businesses. They foster deeper customer loyalty, and in the end, they create more durable, long-term stability. So that leaves us with the central question, the one that really hangs over this entire conversation. After all the analysis, all the debate, and all the trillions of dollars, is ESG a genuine force for change? A real revolution in how we invest and hold corporations accountable? Or is it just a clever new label for the same old game of maximizing profit? The truth is, the answer is still being written, and it's an answer that will very likely define the future of business.